Hello, it's Mario from the Montecinos Group, powered by M&M Capital. Going to share today some recent wins and some investment property strategies from some real life investors that are buying properties today. And this is in 2026. So we'll just jump right into it. And so basically, the whole premise and the why is building a legacy through real estate investment. And there's a couple different strategies. What we're going to see here, there's people that are buying property, fixing it up, and selling it, and then there's other investors that are buying property and holding property long term, and all those are wealth creating opportunities and income, and also appreciation on assets when it comes to real estate. When it comes to investing, it's what are your choices, right? What can you do with the money? Where's your highest and best use? And definitely real estate as a vehicle to accumulating wealth has taken probably the largest, arguably, I should say, the largest chunk with roughly 65% of wealth creation. People definitely, there's been a lot of wealth created in the stock and investments. That's a big piece. Business ownership is definitely another big piece. The other one is just people's cash savings and just saving up money, which is a piece. So all these I think have their appropriate times and depending on the investor's appetite. But for us and in general, real estate is what we're going to be discussing and through investment property financing. So the end user, so a lot of the clients you'll see here are buying a property and selling a property, and ultimately, so the person that's going to occupy the property. And it is, I always find it staggering from National Association of Realtors, so NAR. Every 3 years, they put out a net worth, homeowners versus renters net worth. And the latest one, the median net worth of a homeowner was 396,000, so just shy of 400,000. Versus the typical network of a renter, which is about 10,400. So 38 times X, right? 38 times more net worth in the homeowner. And that's, a big piece is for savings, right? As we're not as disciplined as we would like or need to be this day and age. Cost of life is very, very expensive over the last 5 years plus. And having that forced savings, right? Every time you make a mortgage payment on a 30-year fix where you're paying down principal and interest, that is, that's contributing to your net worth, right? For principal pay down and then the opportunity for properties to appreciate. And long term, there's definitely been all the data showing that the appreciation in real estate. So that is kind of what we're all about. And moving into it. Now we're going to move into the nuts and bolts and really the meat of the presentation is what is going on in real life today. What kind of properties are trading? How are they financing that? How are they seeking the leverage? So that's where I partner in as a private money and investment property specialist. I help out with investors with the loans to secure the property and then also help finance the value add, right? The rehab of the properties. So this first one here we'll jump in is a single family residence in Huntington Beach, California. This was a purchase price just shy of 1.5. The after repair value, so after everything's all said and done, is looking like in the mid twos is what the appraisal came back at. And this was a loan amount of $1,682,500. So amazing leverage, which was 85% loan to cost. So cost is your purchase price plus your rehab budget. The rehab budget on this specific deal was large, right? They're actually adding square footage to the property. So the front left of the property, there's a area there. And then also above the balcony, there's a balcony above the garage. So they're just going to enclose it in. I thought that was a very smart idea. And that was, that's the play on this property. This is, like I said, it is a large budget, almost 500,000, about 485,000 to rehab the property and then also add the square footage. So that is definitely a real sound play is adding square footage, right? Especially if you're not over, if you're not over building, over developing, and you're still within the market and properties are trading in that, end square footage. I think it's a great play. But you also got to keep in mind, what city you're working with and the timeline. So you can factor that in. Next property. So this one we'll be going in further in detail on. So I'm going to touch the highlights here, and then we'll have more details on the slides to follow. So fix and flip. This is actually 5% down of the owner's funds, right? And then there was a seller carryback of about 14% with a $115,000 loan and $100,000 to rehab the property. So kind of a mouthful, but I bring this out enough because this is a very interesting negotiation with buyer and seller, and we ultimately did 82.5% loan to cost. This was a first time investor, and then 90 CLTV, right, which is very very aggressive for especially first time investor. So, and I can kind of lay out where the lender is covered from all this. So at the end of the day, they're at 75% loan to value. So there's 25% equity based off the after repair value. And there's $100,000 to fix this property up. And this property is located in Sun Valley, California. So we'll be diving in deeper on that one. And then the last one on your right, this is a single family residence in LA. This investor has owned the property for a long period of time, actually had the property owned free and clear, right? And renting it out and having good rents. They were looking to purchase a new investment property out of state. So we pulled the funds from this property to put a very, very, very large down payment on this investment property that they're buying out of state. And we did it on a 30-year fix, right? So no tax returns, no W-2s. The underwrite, how to get the loan, was just based off the cash flow of the property. So the income was greater than the total payment, and the total payment is your principal, interest, taxes, and insurance on that scenario there. These are some past ones a couple months ago. Another fix and flip, 10% down for investors that are seasoned investors, so people that have 3+ properties they've bought and sold in the last 3 years successfully. The middle one was a bridge loan, a big loan on a $5.3 million purchase property on that one. And then the last one on the right was a fix and flip, 15% down. So another one of those. And so here's the case study. So this is the case study on the property that the seller did the carryback, right? So you hear a lot about creative financing and seller financing. So this was a combination, right? This was a private money loan with some seller carryback financing in second lien position. So they bought the property for $820,000. The investor had to put 5% down of their own funds, which was about $46,000. They received $100,000 to fix up the property. The loan to cost ended up being right around 82.5% loan to cost and 90 CLTV. The after repair value came in at $1,015,000. So that's kind of where our ceiling was based off that. So if you did 75% of the $1,015,000, that's how we back into the total loan amount of $759,000. And then we take out the $100,000 rehab budget, which they'll have to draw on it. That'll leave you with $659,000 for the initial loan. And that carry on that, the initial monthly payment is $5,285. So $5,285,000. And then, like we mentioned before, the seller is carrying back $115,000 for this specific scenario. So very creative. It's not typical that you can get a seller carryback financing and also do private money. Not many institutions will allow that. So that was, I thought, very unique. And then a little bit about the borrower. The borrower did have a decent credit score, 690 credit score. Typically, the minimum is 650. You can get a private money loan with under 650 credit score, but you're going to have to put a little bit more money down, and it'll be higher interest rates. This individual was a U.S. citizen. They had cash on hand, about $145,000. That helped out because it showed they had money for the down, the minimum of the 5%, and then also have reserves. In this scenario, they wanted to see 6 months reserve, so 6 months of payments. The borrower was self-employed. They had a construction crew that they ran. Wasn't a licensed GC, but experience in construction. This was their first time They were a first-time investor on this scenario. Next up here, this was the bridge loan case study. So this was a $5.3 million purchase in Coronado, California. They just needed a fast close. So that's the reason why they ended up putting about 25% down. So straight bridge loan on that, no rehab budget. If you ever have any questions, we're here to help. You can schedule a call with us, or you can reach out to me at 562 next 3787, last 48902. You can book a call here. You can scan that QR code, and we'll be happy to hop on a strategy call with you. Once again, you can also reach out, text 562 next 3787, last 48902. Appreciate you guys coming out, and look forward to connecting.